Did you know that 56% of all businesses applied for funding last year? That means that out of two of you watching, one of you applied for funding last year. Did you know that bank rejected 80% of their applicants? Meaning they approved 2 out of 10 people. So there are 8 people remaining who got denied. However, for these 8 people who got denied, did you know that there are private lenders who finance more than
$100 billion? Oh, gentlemen.
But wait, it's even more. Private lenders financed more than $1 trillion last year. I'm talking trillion with a T.
So, how many zeros is a trillion? Like,
a lot of zeros. Imagine how important the private lending industry is, but most importantly, how important it can be for your business. So, by the end of this video, you'll know if and when you should go to private lenders. Let's dive in. Question: do you need help with a private lender for your business? But most importantly, will you be able to make more money with a specialized lending? Imagine if it takes you 5 minutes to apply for funding. Second, you find what is the best route for your funding. Third, you get exposed to over 85 private lenders and you actually get funded. Do not imagine it. Just go to Zoryn.com. As well, I put the 5-minute link application for you down below. First, banks. Banks rely on deposits from clients in order to lend out money. So they have a certain amount of reserves, then they can borrow from the feds and they can now lend out money. Therefore, they're heavily regulated. The reason why bank applicants get denied so much is because the average bank applicant has a FICO score of 721. Where are you in terms of your credit? Banks cater to people who have good to perfect credit. The takeaway regarding banks: first, only go to banks when you have good to perfect credit. In general, it's 680 plus credit. Second, banks have the cheapest money to lend around. So yes, you will have the best rates and cheapest money possible. So if you can go to the bank, yes, do go to the bank. Now, about private lenders, they are called non-bank lenders. The way they work, it's a pool of investors who put money in a fund and then they disburse money out to people like you, to me, etc. Private lenders, because they do not have a banking license, therefore they are not regulated like banks are. Therefore, they can cater to people who have even no credit. It can be the wild, wild west for the non-bankable. However, underwriting is pretty much the same, meaning that for the paperwork that you have to give, because private lenders, they want to get paid back too, right? Just like the bank. However, the underwriting is a lot faster, more flexible, and all those things. So it is a world of difference. Now, what type of private lenders are they? First, you have general purpose, like private lenders who give out lines of credit or term loans just like the bank do. Then you have SBA lenders, also equipment financing, and what they call asset-based loans, which are loans that are based on your account receivable and your assets. It's called factoring, but more. And then you have working capital, what they call MCAs, merchant cash advance. Very important. This has been the sector that has the most approval out of all those sectors. And finally, there are real estate lenders. And there's a lot, like for everything under the sun. We'll get into that in a different video. The important point, there are no limits to the type of private lenders that you might find out there. As an example, you cannot go to the bank to finance a strip joint, but you can go to private lenders. You can even decide to open a strip joint for seniors over 80. Do your thing. But you will find a lender that specializes in that. Another example is for fix and flippers, meaning people who buy properties, fix them to resell them after, right? Private lenders, they will finance the purchase and they will give you all the money for your repairs. The bank cannot do that. For instance, do you know who's been the biggest mortgage lender last year? Do you think it's the bank? Well, no, it's not the bank. It was Quicken Loans, now known as Rocket Mortgage. So do you see how important and how big the private lending industry is? The takeaway, you know when you go to the doctors and then first you have to go to the general family doctor and then that doctor then will refer you to a specialist, let's say a heart doctor, a brain doctor, whichever. So the general family doctor is the generalist, whereas the specialist is a specialist. So this is how you should regard the bank. The bank is a generalist. They cannot do specialized loans, but they can give you a loan for everything. So they are the general family doctor, whereas private lenders, they specialize in lending and they do the lending that the bank does as well. So a private lender may be your best friend. Let's say that strip joint again, if you want to open it, finance it, yeah, the private lenders are your best friend. Second, private lenders, they specialize in the non-bankable. Those business owners who do not have perfect credit, they specialize in them. Now, if you like this video, you're gonna love this.